Budweiser is back in town. Anheuser-Busch InBev is re-rolling out its stalled listing process, or actually it was kind of a failed listing process, with a new package in Hong Kong. Alec, what's going on?
That's right, yeah. So you remember in July, as the protests were happening in Hong Kong, this company, spin-off from AB InBev, intended to raise nearly $10 billion. The offering fails, incredibly overpriced.
Hardly surprising.
Exactly.
I mean, like the city was on, on fire. Multi-million. Well, depending on how you count it, hundreds of thousands of people in the street. But you think it was overpriced as well? It
was incredibly overpriced. Yeah. I mean, this business is kind of split between emerging markets. You've got like India, China, Southeast Asia, and then the other half is kind of slow growth markets like Australia, Japan, and South Korea.
Right.
And yeah, it was priced more in line with the emerging markets.
Okay.
So
now it's back. What's changed? I understand the target is lower, so they took Australia out.
That's right. Yeah. Quite a lot has changed. So this time the valuation is very similar. It's 17 to 19 times the EBITDA that the sponsors are predicting for this year. Which is very similar to the last offering. However, the business is different now that they've sold the Australian operations, which were kind of low growth. So now it's kind of more in line with the last valuation.
Well, so the shareholders are going to get exposure to the big Asian markets, China, India, so on and so forth.
Exactly.
But I mean, like, as far as I can tell, and from what you've written, like, they might well actually end up, if this works, they might end up getting about the same amount of money anyways. How likely do you think it is that they're going to pull it off this time?
That's right. I mean, it's very possible. So at the top end of the range, the enterprise value is about $50 billion. If you factor in the sale to Asahi, the Australian operations, that's another $11 billion. And I think the enterprise value, the last offering at the very top of the range, was around $63 billion. And yeah, it's very possible they'll pull this off. I mean, the valuation is better. They've got a cornerstone investment from GIC this time around. They've got a very defined dividend policy.
State fund, right.
That's right, yeah. And also, I mean, our sources are telling us that 5 investors have accounted for $3 billion of the offering already, including GIC. So it's very probable that this will
Well, let me ask you,
fly.
I mean, so everybody's been warned. I mean, the Hong Kong IPO market generally has not been doing that well this year. And we just had a recent listing, Shanghai Henlius, which came in at the bottom of their targeted price range. Do you think the whole market is kind of watching to see how Budweiser is received here, and if it's successful, more could come?
Definitely. I think there's a feeling there's a bit of a window up at the moment. You had the US rate cut this week. There is some kind of optimism around a softening in trade tensions, further softening trade tensions. However, there's a lot working against this IPO.
Yeah, the protests are still underway, right?
Exactly, yeah. I mean, the protesters have sort of graduated from throwing bricks to throwing petrol bombs now. You've got noises in the Middle East. There's, I mean, it's
Chinese
still
economic data isn't looking great.
Exactly, and the kind of hostilities between the US and China could well continue until the US general elections in November next year.
Well, I guess they can always call it off again. We'll have to keep an eye on it. Thanks, Alec.
Thank you.
Thanks for watching, everybody.